Good morning and welcome. We're going to be starting off with the euro against the US dollar as usual. As you can see, the resistance line that we had placed together at 1.1070 appears to have been confirmed by two daily candles and then potentially even a third today. Overall, it does appear that this resistance level is still standing and has not been violated. As such, we could continue to maintain our relatively bearish outlook for the particular pair, or we could now opt for a sideways bias between S1 and R1. In any case, we would not maintain a bullish outlook for the euro against the US dollar up until the release of the US JOLTS job openings figure. That figure could instead provide some support for the US dollar should it come in higher than expected, or could weigh on the US dollar should it come in lower than expected. For the US as well, we're noting the factory orders rate, which are expected to provide support for the greenback. Overall, from the technical point of view, with RSI being at 53, we could maintain a relatively sideways bias between S1 and R1. However, I would like to see the pair bounce off S1 before opting for a sideways bias. As such, I would currently maintain a bearish outlook for the pair, with the next target for the bears potentially being the 1.0970 support line. If it does manage to break below that S1 level, our next support line, which is a potential target for the bears, is currently at 1.0880. And if it does manage to break below S2, then we have S3 at 1.0775. Now, in the event that the JOLTS job openings figure shows a resilient US labor market and the factory orders rate comes in as expected or higher, this could come into play. Whereas, should it showcase a loosening labor market and then the factory orders rate coming in lower than expected, we could potentially see the euro gaining against the US dollar, potentially even breaking above our R1 resistance level of 1.1070. Now, usually we move on to the USD against the JPY, the British pound, the loonie, which we are noting the BOC's interest rate decision later on today. But I would like to see, first of all, crude oil. We did the technical analysis together yesterday. We said that this was a bearish triangle, as we noted, lower highs, and then bouncing off S1, but failing to break this prior high, and not even moving up to R1. And as you can see now, WTI cash on the daily chart, so crude oil, has broken below that S1 level. We have placed S2 at 67.90, which is the next potential target for the bears. If it does manage to break below 67.90, we could maintain that bearish outlook, which we had said together yesterday, with the next potential target for the bears being at 64 and 10 cents per barrel. We do need to readjust our text labels, so this does become S2. 67.9 does become S1. 7140, which was our old S1 level, now becomes R1. So this has essentially support now turned to resistance. Now, in terms of financial releases that may have impacted crude oil, one could look at yesterday's financial release of the US ISM and S&P manufacturing PMI figures for August. Both of them came in lower than expected, implying a widening contraction of manufacturing activity within the US economy. That is a bit of a concern for oil traders as well, as a reduction in manufacturing activity, so a contraction as well, may also imply a reduction in demand for oil. And as such, those financial releases may have weighed on crude oil's price, with it currently being traded at 69.65 dollars per barrel. And now we are removing that old R3 level and we are looking for S3. I'm going back and I can see some price action having occurred on April 2021. And then our next support level could have been at 61.83, but that's too close to that S2 level we have. And I'm looking for that next significant support level. Large accumulation of buy orders, 58.80 would be my S3 support line. So 58.18, that is my S3. 67.90, 64 as well, 71.40. And now I just need to readjust that text label. This becomes S3. We are going to be looking at NVIDIA as well today. It declined, if I'm not mistaken, by 9% yesterday following the announcement of the DOJ's antitrust probe into the company. So that is a bit of a concern for NVIDIA investors. So finishing off with crude oil, we are maintaining that bearish outlook since yesterday. Target is 67.90. Next potential target is 64.10. So we are maintaining that bearish outlook. The downwards moving trend line, the breaking below support and resistance, and that RSI indicator below our chart tend to support the bearish outlook for the particular commodity. USD JPY, as we said, it's broken below that upwards moving trend line, so it did find resistance at 146.85. So we are going to be maintaining that sideways bias, which we had said yesterday, between S1 and R1, so between 143.45 and 146.85. So we are maintaining a sideways bias for the USD against the JPY. Moving on to cable, it is still below that R1 level, validated it at 1.3140. R2 is at 1.3290. I would still maintain a relatively bearish outlook for the British pound, and I would like it to bounce off S1 for me to maintain and opt for a sideways bias. If it does manage to break below that S1 level of 1.3040, then I could switch and maintain a bearish outlook down to 1.2890, which is the next potential target for the bears should the S1 resistance line be broken. Onto the US dollar against the Canadian dollar. We are noting the BOC's interest rate decision later on today. There is approximately a 76% probability, which has been priced in by market participants, for the bank to cut interest rates by 25 basis points. The remainder is being attributed to a 50 basis point cut. So essentially, the markets are expecting and take it as a given that the BOC will cut interest rates. So we're now looking at the bank's accompanying statement. If it cuts by 25 basis points, and then there is an indication of an unwillingness by policymakers to continue cutting interest rates, that could be considered as hawkish in nature, which in turn could provide support for the Canadian dollar. Whereas if they imply that they may continue cutting interest rates or even cut by 50, that could further weigh on the Canadian dollar. So essentially, for the USD CAD, when looking at the monetary policy decision, which is set to occur later on today, we are bullish for the dollar against the Canadian dollar. The dollar may also be weighed down by the decline in oil prices, as Canada is an oil exporting nation. So, overall, it does not look good for the Canadian dollar. Now, I would stop just shy of calling this as a bullish outlook. The RSI is still at 42, which does imply some bearish tendencies. The Bollinger Bands are still tilted towards the downside. So personally, I would maintain a sideways bias between S1, which is at 1.3475, and R1 at 1.3590. So sideways bias for the USD against the Canadian dollar. In the event, however, that it does manage to break above R1 at 1.359, the next potential target would be 1.3720, and then I would opt for a bullish outlook. So essentially, a break above R1 would constitute a switch from a sideways bias towards a bullish outlook, and a break below S1 would constitute a switch from a neutral bias towards a bearish outlook. Overall, playing with S1 and R1. For the Aussie, it is bouncing off and has actually just broken below that S1 support line. The RSI is at 50, which does imply relatively neutral market sentiment. But having broken below that S1 level of 0.6710, I would switch for a bearish outlook. But personally, I would ignore the Aussie during today's European and American trading sessions. Of impact and of interest, maybe tomorrow, RBA Governor Bullock is set to speak during the Asian session, so the Aussie might see some movement during those early hours of Thursday. The S&P, we've done crude oil, Dow Jones, gold. So gold appears to be taking aim for that 2,470 S1 support line. It's broken below the mid-range of the Bollinger Bands. As we said yesterday, it had broken below this upward swing trend line. RSI is at 50, but personally, I would maintain a bearish outlook if it manages to break that 2,470 S1 support level. If it does manage to break that, my S2 is currently at 2,420, and lower than that is 2,353. If it bounces off S1, I would not opt for a bullish outlook. I would instead maintain a sideways bias for the precious metals price between S1 and R1, which is at 2,530. If it manages to break above R1, then of course we have R2 and then hypothetical resistances, of R2 and R3. For Intel, that gap up appears to have been filled, worrying for the company's stock price. If it breaks below 18, 18 and 90 cents, so roughly $19 per share, the company's stock price could move even lower. That is a bit of a concern for Intel investors. Microsoft bouncing off 409.20, which was our old resistance, turned to support. Now the chart is a bit blurry, but we could maintain this sideways moving bias between 409.20 and $425 per share. But now of interest is most likely Nvidia. So here, now we are going to be moving on the 4-hour chart. We take a 30-minute chart for the company's stock price. So it's declining following that announcement from the DOJ. The RSI is below 30. It is at 23, which does imply a strong bearish market sentiment for the company stock price, at least on the 30-minute time frame. If I was using the 30-minute time frame, I would be placing support potentially at $106.38 per share. So that would be my S1. I'll show you why. This was resistance shown by this wick, but then it gapped up, found support, and moved higher. So that is my S1. For my S2, I would take this low here at $97.38 per share. And then you can see this very nice bullish candle here, taking that wick at $90.60 per share. You can see we've left quite a bit of a distance between the S1, S2, and S3, and that is because we are on the 30-minute time frame. For resistance, using this particular time frame, I would opt for something around $115.90 per share as my R1. For my R2, $123 per share. And then for my R3, I would take this high shown by this wick here, reached and found resistance at $131.2 per share. So essentially, Nvidia does appear to be moving in a downward fashion. The technicals appear to support it on the 30-minute time frame, in addition to the RSI indicator. Overall, it's not looking good for Nvidia. ExxonMobil is remaining within that sideways moving channel, which we stated together yesterday, $113.13 per share and $119.53 per share, still maintaining that sideways bias for ExxonMobil. Now we are going to be looking at the major indexes, and that is the Nasdaq, so the US 100, and the S&P 500, which is US 500 on our MT4 platform. Now I should clear this. We can keep our 20,960. So we had two upward moving trend lines. This has been violated, so this is now invalid. The other one that we had placed this week here could invalidate it slightly, but I don't like it as an upward moving trend line. If you look at the RSI, it is resting on 50. But now if I did have to place in terms of support and resistance, For a more macro perspective, we could keep our old support level 17,200, S2 at 15,775, and then we have S3 at 14,270. For resistance, however, I would take this most recent high here at 19,995. That is my R1, but that is fairly close to my R2. And then we would need a hypothetical resistance level of R3. And for that, we would have to measure the distance between R1 and R2. Using this measuring tool. So the crosshair, Control F, that is a shortcut. 87,837. So that is roughly 21,800, 850. So this would be my hypothetical resistance level of R3. And this becomes R3. So S1, S2, and S3. We could place a support level at a higher interval than 17,200. And if we would do that, I would place my S1 at this old high, 18,634 S1. So this is where I would place it. But if you ask me, I'd rather keep it at 17,200. You can see this is a lower high. This is a low. For it to continue, it will have to break below S1. If it bounces off 18,630, might be good for the index. But we also have the US employment data on Friday, so that is still a bit of a concern. But for this week, since we are on the weekly chart, it does appear to be moving in a downwards fashion. If it does break below 18,630, I would not be surprised to see the index take aim for 17,200, which is the next possible support level. We can look at a few individual stocks as well. If we look at the Japanese stock market index, weekly, daily chart moving lower as well. Sort of a bearish outlook for the particular index. IBM, Louis Vuitton, Lockheed Martin. We can look at Airbus, Volkswagen. Well, Volkswagen is now in the news, so Bloomberg is covering this particular issue. So, as we said yesterday, the news for Volkswagen are not looking that good. If they close those plants, I would not be surprised. So, those factories in Germany, I would not be surprised to see IG Metall organizing strikes across the country, which could weigh on the company's stock price. Now, that being said, the announcement, so the essentially a leak that they are considering closing down those plants, could be in the form to persuade the government to give the company grants. In such a scenario, we could see the company's stock price moving higher. But with the RSI currently being at 41, having broken below that S1 support level of 95.58, I would opt for a bearish outlook for Volkswagen. And how do we know our support level is valid? I'm going to be zooming into this 4-hour candle. It's not precisely correct, but you can see that this was support turned to resistance as it broke below, tested, and is now support turned to resistance. So it validates this as a resistance level. So that is my R1. R2 is for 98.50, and then we have R3 at 101.81. So essentially, these are our R1, R2, and R3 levels. And for S1, we have 92.30. For S2, 89.50. And then we're going to be looking for S3 as well. So this becomes R2. If you look at the Volkswagen issue from a political level, I would implore you to look at where those factories they are considering closing down are located. They are located in eastern Germany. If they do close those factories, it would not be a surprise to see a rise in popularity of extreme nationalistic parties in that region, because one may assume that if the company closes down the factories and there is not dissent, there is a desire to express um, their frustration, one could blame the incumbent government, and then one might look for alternatives. So that might be a bit of an issue politically in the future. For now, nothing major and nothing has been decided. It is purely speculation and purely rumors, but we are going to be closely monitoring the Volkswagen story. As from an economical and a political perspective, it could have severe implications for Germany. So, moving on, we do need to find that S3. We have R1, R2, and then R3. It is roughly $3, so I would place my S3 at $86 per share. I'm estimating and I'm guessing the distance between S1 and S2, and I am reflecting that price lower. Essentially, if you use big figures, one could assume that institutional investors are not playing with cents. So positions might not be opened at $89.53, for example. They might be rounded up, so 89.55, 89, 79.50, etc., 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 which is why roughly $3 between S1 and S2, and then 86 is a nice round figure. Even nicer would be 85, but that would be a bit too far away, and it remains to be seen if there is actually going to be support at that level. But the same case is with RS3. So we do have R1, R2, and R3, and then we also have S1, S2, and S3. Based on the most recent information coming out from Volkswagen, I would maintain a bearish outlook that is aided by the RSI, in addition to the support having now turned to resistance at 95.58, which is R1. For Airbus, appears to be recovering slightly. That is nice, but that is the 1 hour time frame. Looking at the daily, moving in an upwards fashion. Rolls Royce, and that is an example. Rolls Royce is an example of RS1 support level. If you have a look, 4 hour candle, very nice, strong, bullish candle, has found support at 461.80, and we can say that with conviction. As you can see, it opened on RS1 level and is moving sharply higher. So, this support level that we had placed together yesterday appears to have been validated in this particular 4 hour candle. Now, for me, despite this 4 hour candle being strong, as you can see, looks very nice, looks healthy, I wouldn't be bullish for Rolls Royce just yet. The most recent development in terms of the engines that were found to be a bit defective, but defective in terms of a particular hose, if I'm not mistaken, that allowed fuel to enter the engine. It appears to be an easy fix. So the issues surrounding Rolls-Royce and the problems with the Airbus A350 may be temporary. It might be a cheap and easy fix that won't require airplanes being grounded for a prolonged period of time, as was the case with Airbus. So I would no longer be bearish for Rolls Royce. I would instead opt for a sideways bias for the company's stock price between S1 and R1, as it does appear that the fix is easy and can be fixed quickly and at a relatively low cost, I'm assuming, because it is simply a hose. How expensive that might be, that is relative. But it does appear to be moving in an upwards fashion. So I would guess that the markets appear to be agreeing with my own personal view, or at least that the news that have come out from Cathay Pacific are positive in nature, that it's a quick fix, quick and easy, and the planes won't be grounded for a prolonged period of time. Thus, we might see, and we are seeing investors potentially moving back into Rolls Royce in terms of their stock price. On balance volume, still implies slightly bullish. RSI is at 40, which does imply some bearish tendencies, but I wouldn't be bearish now. I would maintain a sideways bias between S1 and R1. So if it does move back up to R1, I would not be surprised to see selling pressure. But in the event that it does break above R1, the next potential target for the bulls could be R2 at 503 and $20 per share, pounds per share. Louis Vuitton did break above that downward swing trend line, but it found support, now turned back to resistance. RSI is at 40, which does imply a bearish market sentiment. I wouldn't be precisely bearish for the company stock price, but I wouldn't be bullish anymore, as this could have been an upward moving trend line that was violated. So sideways bias for Louis Vuitton, so LVMH between 594.54 and R1 at 665.70. We can do IBM, we can do McDonald's, we can look at the S&P, the euro against the Aussie, Swedish krona, ExxonMobil, Nvidia, Microsoft. Microsoft, so S1 would be my old R1 for 9.20, and then R1 would be 425. So this we actually went through yesterday. So staying between $409.20 per share and $425 per share. Sideways price for the company. RSI tends to support that theory. Narrowing of the Bollinger Bands on balance volume as well tends to support what we're seeing currently. So double top. It's nice. So sideways bias for Microsoft. Intel has erased those gains it made yesterday. We haven't really looked at the Aussie. So when we looked at the Aussie 30 minutes ago, this daily candle was below RS1. It is now above. So it does appear that 0.6710 is acting as a support level for the Aussie against the US dollar. So I don't think I'm going to be changing that support level as long as it closes above that S1 level. If it does manage to break below S1, the next potential target for the bears could be S2 at 0.6575. Rather than that, we have 0.6465. So look, it is currently resting on that S1 level. If we drop down to the 4-hour time frame, it is finding some resistance, but if this 4-hour candle closes above, then this would still be a valid support line, even on the 4-hour time frame. R1 still valid on the 4-hour as well. So if it closes above S1, next target could be R1, and it could stay in a relatively sideways fashion for the rest of the day, up until RBA Governor Bullock's speech in tomorrow's Asian session. So we've done the CAD, we've done cable, so the Loonie cable, we've done oil, we've done gold, we've looked at Intel as well, we've looked at Microsoft as well, we've done Nvidia on a 30-minute time frame, ExxonMobil staying in a sideways fashion, we've done Louis Vuitton, we haven't really looked at Tesla, but there's nothing major to announce except that they are considering that their Tesla Y model may be a six-seater in China, which could increase sales for the company. That might be nice. Lockheed Martin, it's nice as well. Copper. We could do Airbus, Volkswagen, Rolls Royce, or we could opt to do something different today. Let's see what might be of interest. Philip Morris, we could do perhaps UBS, Deutsche Bank, AIG, ARM is nice as well. Tesla, Shell, Rio Tinto, JSK. Could do, let's do Deutsche. Is this Deutsche Bank or Deutsche Post? Deutsche Bank. So let's do Deutsche Bank. So this is probably going to be the last technical analysis for today before we pick it up tomorrow. So Deutsche Bank. Daily time frame. We do have RSI currently at 50. It is bouncing off the mid-range of the Bollinger Bands. That is nice. But the issue for me would be this. I've seen an upward moving trend line that has been violated. As such, not really a bullish outlook for me, but rather relatively sideways bias, and I do need to find my support and resistance levels. So looking at the chart, I can see immediately these two candles. Sellers found a difficult time breaking below, and then the buyers took over. So the bulls took over at 13.81 from the bears. So that for me would be an S1 level. So 13.80, that would be my S1. Then I am taking this low point here where it took down as my S2, 12.20. That is for S1. For S3, so we are leaving about $1 in between the support levels. And this actually fits into our narrative as well. I will highlight exactly what I've seen so that you can look at it yourselves. This here, inverted hammer formation. But look, it wicked down, it found support and moved higher. So the bears were unable to take control over from the bears. The bears were unable to take control over from the bulls. And then the bulls pushed the company's stock price even higher. So $11.38 per share. 11.38 euros per share. That fits very nice into our narrative, and for me is a valid support level, as I am seeing a lot of buying action at that price level at a prior point in time. But that is very close to my S2 level. Still valid. For my resistance, I would take this wick here, 15.10. Actually, I might need to revisit either my S2 or my S3 level because the distance is a bit too much. It's a bit too far away. Maybe to use this. Resistance could be at 15.85. So I think I'm readjusting my S2 and my S3. Bring them much closer. And if we look at how the stock price moves, and this is a daily chart, if it was a 4-hour, then yeah, we would extend that S3. But it is a daily chart. So I'm going to be bringing, and I will be adjusting for S2. I'm pressing it above these three bearish candles, but it's too close to my S1. We can take this prior high, look down lower. So 13.05 as my S2, S1 13.80, 13.05, and then 12.20 as my S3. And then for R1, 15.10, R2, 15.85, and then this high here. But I will be taking the opening of this bearish candle at 16.70. So for Deutsche Bank, I wouldn't be bullish, but I wouldn't be bearish either. Instead, sideways bias between 13.80 and 15.10. Now, tomorrow we are going to be looking at the US dollar against the Canadian dollar. We are going to be looking at oil, and we will be going over the financial releases that were released later on today. So the US factory orders, job openings figure. We are going to be preparing for the ADP figure. And because it is Thursday, we are going to be noting the US employment data on Friday, potentially looking at support and resistance levels for that particular day. And then we are going to be looking probably again at Volkswagen and Rolls-Royce, and maybe another stock price as well. And with that, I think we are done for today. Thank you very much for watching. I will see you all tomorrow, same time, same place. Have a wonderful day and take care.
Okay, shall we start? Again, welcome everyone. So today's topic, I'm going to talk about coffee multiple moving average strategies. Okay, just before we start the session, I just want to highlight risk warning over here. Okay, anything in this video is educational in nature. Nothing should be construed as investment or trading advice. If you want to trade, please do your own due diligence with the guide trade. Okay, and maybe disclaimer here. Just mention. Maybe just want to highlight risk warning over here. As we already know, trading, forex, and CFD may carry significant risk to your capital, and it may not suitable for all investors. So please come enjoy the webinar and learn together. Okay. The speaker today, my name is Peggy. I'm an investment analyst and a prop trader as well. These some of certificate that have passed all the challenge. If you guys want to know about the prop firm, you may just Google it. All right. So just a quick one. So basically, how you get all certificate, which is you need to pass all the challenge. Phase 1, phase 2, which is phase 1, 8% profit target, and phase 2, they have like 5% profit target, and they have like 5% maximum daily drawdown. All right, just quickly like info for all the platform. And as you know, today I'm going to cover which is what is the coffee multiple moving average strategy. Okay, how to get an entry and the exit criteria, and how can you improve on it. Okay. So what is a multiple moving average strategy, or maybe short form I just say GMMA for the short form for coffee multiple moving average. Okay, strategy is a trading technique developed by Daily Coffee. It utilizes the multiple moving average to analyze the market and identify trends. The strategy used two groups of moving averages just to represent short-term and long-term market sentiment. Okay, and this is how it look like. Okay, the GMMA. Okay, I will bring you guys to the maybe the chart later and how we're going to implement this indicator. Okay, so actually it consists of two of moving averages for the part 3, 5, 8, 10, 12, and 15. These for the short term. Okay, and those moving averages represent the behavior and sentiment of short-term traders. Okay, so the moving average 3, 5, 8, 10, 12, and 15 day, which is the green color, which is over here. Okay. And for the long term, moving average consists with the path 30, 35, 40, 45, 50, and 60 days. Moving averages represent the behavior and sentiment for the long-term investor, which is the red color, which is this one. Okay. And how we're going to use it in the chart. Okay, so you can use GMMA to identify trend. So basically, when the short-term moving average is above the long-term moving averages, which is when, okay, the green one, which is a short moving average, go above the red color. Actually, there's a long that will be column that will go for wait, okay, that will be identified for the uptrend. So when they close, we will gonna buy over here. So basically for the okay, when the short term moving average is above the long term, which is when green above red, okay, and both group are separated with a clear gap. So basically, when the green go above the red, and you can see really clear a gap here, is indicated a strong uptrend. You can see that when there's a gap between the green and the red color line, we already know that it's strong uptrend. When the short-term moving averages are below the long-term, which is when green cross below the red color one, and then you can see there is the gap here. Okay, it indicates a strong downtrend basically. Okay, so how are we going to get a entry and exit signals? Okay, for the buy signal is generated by the short-term moving averages close above the long-term moving averages. Okay, for the sell signal is generated when the short-term moving averages close below the long-term moving averages. So basically, this is how I just mentioned. You can see that, okay, for the enter, okay, this is a buy signal. You can see that when the short term, which is the green color, close above the long term, which is a red color, we're going to enter over here. And I circle over here, meaning that this is acting at the support level, meaning that this is our maybe buy entry. One, the price pullback here is acting at a support. Either you want to get another buy entry over here, buy entry over here, buy entry over here, buy entry over here. Okay, and we're going to exit our buy position, for example, for this pictures when the short term close below the long term, which is green, close below the red color one here. Okay, we will exit the buy position because in this case we're going acting at the resistance level. Okay, when price go above, pull back, it acting at support level. For in this case, it acting at the resistance level. Okay. The setting to use, which is already just mentioned for the short term, we use EMA typically set at 3, 5, 8, 10, 12, and 15 periods, which is like the previous days. Okay, for the short term EMA typically set at 30, 35, 40, 45, 50, and 60. Okay, and you can see that when close above here, we're gonna buy. Okay, and then you hold a position. This is how it look like. Okay. GMA track the two activity of two major group in the market. Okay, for the short term, you should a trader like we are the retail trader. Okay, investor it could be like bank or any like swing trader. They like to hold like the position longer. Okay, for the trader, we will track at the like the green color one here. Okay, and okay, for the trader, little trader, we will use the short term, which is 3, 5, 8, 10, 12, and 13 moving averages. Okay, like all we have we trade, for example, we already see that price is go below the GMMA, right? Like go below, it's an acting at the resistance. Either here you short and then you short from this one, either you close as like you at this level, but in this case what you can see here is acting the resistance level. This is go up to until the investor or those like bank or institution for the red color one. Okay, by the way, if you have any question, you can let me know as well. For the investor or those like bank or big institution, you can see that they are used longer term, which is they are using 30, 35, 40, 45, 50, and 60 EMA. Okay. Don't worry, after that we bring you guys to the trading view and we're going to implement this and practice together. Okay. And finding trend. Okay, what you can see here, the trading plan, like I said, there got maybe two type of trader: short term, either swing, day trade. Investor, that could be could be swing trader or position trader, or those like back intuition, they like to use like the longer EMA right here. And then, oh, how are we going to identify trend? Basically, we already know one price, meaning that the green color one, which is a short term moving averages, close below the red one, which is the long term moving averages, right? You can see that price on downtrend, basically because price falling, pull back to the GMMA, and then revert and then continue to the downtrend. When price go below the GMMA, we know that it's going to form uptrend to downtrend. Okay, when price close above, okay, the GMMA or the long term, which is the green one, short term close above the red one, we know that price changing from downtrend to uptrend. Okay, maybe let me just go one more slide and then we'll show you the opportunity. Okay, well, strong trend trading opportunity. We already said that price direction supported by both short term and long term. Okay, this is just the same one. Let me just show you in the chart over here. Okay, let's just go over to the trading wheel. Okay. Okay, in the trading wheel, you just go to indicator here. Okay, you just go to GMMA, which is short firm. I pick the first one. Okay, you can see that a lot of traders are using this only like 4,900 like user here. Okay, you can just go and implement. Just click, it will look like this. I use default setting, which is just the same in the slide. I just like over here, these are the short term and the red one for the long term. Okay, and the number of the setting is the same over here, which is 3, 5, 8, 10, 12, 15, 30, 15 for the short term. And for the long term, they're using 30, 35, 40, 45, 50, and 60 period. Okay, and how are you going to use this, which I just mentioned. Okay, you see very clearly that one. Okay, short term, I will just mention one green, okay, is a short term close above the red one, which is a long term GMMA, which is over here, right? We're gonna buy, you're gonna buy one price close above. Yeah, we buy here, right? And you can see that price go and this one pull back to the short term, which is acting in the support level. And again, it pull back to long term here. Okay, and then this is a strong uptrend. Why strong uptrend? Because you can see that one both short term and long term, okay, they like separated and have a gap. This is really strong uptrend. You can see that this is really strong uptrend. Okay, and we enter the buy position here, and we're going to exit when the price, when like the red one, the green one like cross below. Now it's gonna crossing. So basically we see like that. Okay. Because now we in head 4 time frame, right? Over here, we know that there may be a divergence here. Okay. You can see that we're going to exit when price, starting like cross below here. And of course, now price already break below this support level. If you know how to look at the support and resistance, it used to be our support, now it's become our resistance level. So either you exit when you see the price, it seem like make a price action here or make a divergence here, or seem like the short-term moving average is like like close below here. Either you exit here or you exit at this level, meaning that if you have the entry seen from like this entry, we're gonna buy up, and you exit at this level. We go for the long position here. Okay, and we target and we exit at this like level because price is falling and the similar close we put there, and we going to put the Excel here. You can see that the RR risk and reward is almost like 4. I mean, let's just say 4 or maybe like more than 3, 1 to 3. Okay, so you can use this for like swing. If you're a swing trader, you can use GMMA for identify trend. And now we are gonna short. Okay, I already short the GBP because price already break below the my kind of support level here. Okay, this is very strong, and there is a divergence here versus the I side. It is I side here. You can see that. Okay. Price make high indicator is make a lower high. So there's a divergence here. Either you use this one, you hold your buy position until you see kind of like the divergence here, bearish divergence, or you see the price action and then you exit your buy position and then you sell. Okay. And this is an example in head 4. What's about even if we're going to use GMMA on gold, okay, USD. Okay, you can see that. And another one, when the price is sideways or ranging, okay, what you can see now, one price is ranging here. You can see that the GMMA is kind of like where is my, okay, it's like they look like narrow here, right? You can see that it's crossed the candle here, and then you can see that the line is just close to each other here. So in the price ranging, you can see that's right. And we already monitor that. Okay, it seems like here you want to trade, definitely we know that this is our support level. Either you buy here already, and then you can see that you buy here and then see the price kind of like cross above the green one, cross above the red one, which is a short-term cross above the long-term. Okay, we might have another buy order over here and then you hold. Okay, and you hold, even though let's say you hold here, you buy here, pull back here, now it acting at the support level. In this case, like you can see here, like you can see the rejection here, right? This is acting at the support level. And they go to here, the long-term one, and then after they bounce off and continue to go uptrend until here. If you know how to look at candle, look at the candle, you know that this is like the rejection over here. And then to me, when I want to exit, I don't have to wait until like, you know, short-term close below the red one, because you may only form like you earn a lot, become you earn later, a little, because over here you can see that at this candle they close with the belly engulfing candle. In this case, able to hold my buy position, I'm using the trailing stop loss, up to here. And price is for close with belly engulfing, which a lot of rejection over here. So meaning that to me, I will exit my buy position because price reach changing momentum for uptrend to downtrend. And what you can see here, one price close with belly engulfing candle, and this one it can about this kind of about up here. Okay, from here they go back to where, and then end up with another price action over here, and then you can sell. Okay, either here pull back here you sell. Why we sell here? Because you can go to the H1. In H1 price is closing with price action. We will just zoom to see this is our price action, and over here is, I don't know whether you guys joined my webinar yesterday. Yesterday, I think we shot GBP and we shot GBP, right? Again, you can see that this is our, either you call supply zone or you identify your bearish order block, same meaning. Bearish order block, you can see price falling and bounce off from the, you know, support level here, and then we gonna short at this candle because in H1 price go to like bearish order block, and we have price action here. Okay, from buy position here we close and then we sell. Again, you can see that now the short term is close below the long term moving averages, which is green, close below red color, and they really strong downtrend because what you can see here, there is a gap between short term and a long term, right? And then you hold until where You just hold. Okay, if you don't know where close, like where to close profit, either you close at the support level, or you can close when the green, something like that, the green close above the red one, meaning end of the downtrend. Okay, and then you close. But now you can either you short from here, you can use the tailing stop loss, like maybe you like you like your stop loss, and then you use like a move every like 10 pip. Okay, to lock in your profit, for example, move until here. Let's say maybe here price bounce from this level and hit your stop loss here, meaning that we still earn a big money from this area to this stop loss here. There quite a few bit from there. Okay, so this is how we trade with GMMA. So GMMA, if you are a swing trader, I think you can use this indicator. Okay. Okay, let's just go back to our chart here. Our thing. Okay, let's just cover easy identification of overall trend. We know the price go below the GMMA is on downtrend. Price go above is on uptrend. Okay, and identification on the overall trend. We said is a reversal. So pull back here. Okay, reverse here and then continue, and now ranging or consolidation here, because you can see the price is the GMA is just cross or just sideways on the candle here. Okay, right action, how to implement and read it, I already tell you guys. Okay, the degree of separation, strong uptrend, really strong downtrend, because there is a gap or the big gap between short term and the long term moving averages. Okay, narrow separation or crossover trend is weak, you can see that, or wider separation is a really strong uptrend or downtrend. Okay, crossover is a bullish, we're gonna buy here. When cross below is a bearish, we're gonna short from the level, we buy here, exit here, and then we short. Okay, which is just now I just show you guys. Okay, heavily intersection, lack of price trend, meaning just a sideways. Even it's sideways like that, either you buy, we buy here. Okay, price go to kind of this level, this is kind of identify resistance level. Okay, and then you can see the price kind of like ranging. From ranging here, either you close your buy position and then we're gonna short from this level, because strong uptrend consolidation or sideways and then continue to fall, right? And then you can see that the green cross below, and then there's a gap here. Okay, we know that we're going to hold our sell position until here price kind of like go above here, either you exit here, or you can see that there's a rejection here, and then there is a price action, you choose exit your sell position. Okay, from here either, or maybe of this kind of boom here. Okay, and we put our sell here, if like if you not close your sell position here, is from this one you might just earn a few dollar or few like dollar here. So just use your tailing stop loss when we use GMMA, or then you can lock in some profit. Okay, this is a long example of buy position. This is bullish here, we buy here, we hold, and then we exit over here. Okay, you can either exit here as well, but to me I will exit when the price is already has bearish engulfing, and then you can see the consecutive red candle here. So you should already know that we should exit the buy position. For the short example here, bearish. Okay, the green one short term close below the red one with the long term moving averages, and then you can see that there is a big gap here, really strong downtrend. Okay, we short and hold back here, pull back, either you have another short position and then you hold, and either here, okay, I will exit my short position because it seems like they're going to like go above the red one. Okay, but then after they continue to go downtrend, either we exit here and either here, or you have another sell order here, because it seems like this resistance level and price action here. Okay, and then continue to downtrend. All right. Okay, this is a breakout from consolidation. Okay, when the line that the separate, that mean here we already know, I just mentioned it, very strong downtrend because there is a gap or subluation here. Okay, boom. Long-term pullback, I just mentioned this how actually, so this how the trader use the um this indicator. Okay, you can bookmark, but I think it's a good for the swing trader. Okay, you can see they're really strong downtrend. Definitely you're gonna hold gold, right? Because you have to look at dollar. Let's just look at dollar as well. You can see that it very strong uptrend as well here now, right? When they close at this one, they are just sideways here. Suddenly they break because of this candle, and then the green one, they close above the long-term moving averages, and then you're gonna buy right from this level, and then you're gonna hold until when? Hold until the green one close below. Okay, this is a head one time frame. What you can see here, look at the candle. This is a sideways or ranging or consolidation somewhere around here. Okay, over here, and the green one, which is the green color here, close below the long term, which is the red one, and then you're gonna hold your short position here and then continue here. We might, some of you guys might want to exit, like you see that. Okay, should I, let's say one price go like that. Okay, you either, some of you guys don't know to trade, just bet on GMMA, you might exit the short position, but you might think that, okay, seems like price is going to change from uptrend or downtrend to uptrend, but you to trade with other like technique, which is in this case, I identify this my kind of like resistance level, and then I make kind of like pull back. You see, okay, it seems like price already almost like overbought, right? And then you hold, and then you can see that I have a lot of rejection over here, and then either you short here, you short there, and then see like ranging here, you have another short position, another one, and then you can see the price close below, and then you hold until exit here because strong downtrend, and then after that is suddenly sideways. Okay, whenever you see that the candle or the price sideways, should exit either buy or sell position. Okay, no need to hold until like the green one close above or close below the red one, because okay, you might from your, for example, like from you earn $100, it might become like $50. Okay, these are the dollar. What about its work in gold? Gold is very strong. You can see that gold in H1, this is how in H4. I think in H1 you will see really clearly that from where starting to sideways at this level, right, somewhere here, and then you can see that the line, they like close to each other, and after that they kind of like go close above, which is somewhere here, right, and then you buy because you know that is our support level. A lot of rejection, price just sideways, continue to break here, like break this level, right, like break here. Okay, and then continue, you buy here, price pull back, you have another buy, either here you buy, because over here we buy because this is our support level. It just pull back to your support level here, right? And then after that you buy, and then you hold, and then after that you can see that the line, the color, the red line, they're starting to kind of go far away from each other. You can see that the degree of the subluation here, and then you can really know that this is very, very strong uptrend, right? You can see the uptrend pull back at, they are acting as support level, support level, support level, and they are very have a big gap here. Okay, now they are pull back once. Okay, you can see that very strong uptrend up to here, should exit the buy position here, barely engulfing, closing already. There might be a divergence here. Okay, and then you should sell. Okay, for gold, this is very nice trade setup for gold. Okay, and falling. You should ask me gold. I'm kind of like waiting to, I already shot go and close already. Okay, like just now price kind of pull back here a little bit as like support level. Is they're going to break here. So the target for gold, I'm looking around this level, which is the support level here for gold. I'm gonna, which is 2004, slightly 2004 to 23.95. That's gonna be my first support. Either you're gonna buy from that. Um, there were 50% here. So basically, I'm gonna buy gold around this level. I buy because I buy again the trend. I did not follow the trend because it seemed like now selling gold already. So you're gonna buy here at about 23, 23.95 to 24,000. Okay, I will just buy here, and then my TP take profit is gonna be somewhere for scalping, or this is gonna be like TP1, meaning that if I'm gonna buy at 23.95 or 24,000 here, at least 100 pip or 200 pip, or at least for scalping 50 pip to 100 pip, you should close, or you telling stop off for gold, right? Because from here, I think there might be a people want to sell from that level. Target 2004. That for gold for the first support. Second support is gonna identify at this level. This is my second support, meaning that falling another almost 200 pip or 300 pip falling from first to second support. That will be 50 to 50 and 61.8% fib level. Okay, you can see that falling very nicely in gold, right? Very strong. This H4, okay, this will have a gap here, really strong downtrend. And then we gonna wait for the price to come to our support, and then we gonna buy from that level, which is the buy zone. Okay, you need to set your stop loss as well, because if price really have really like fall all the way to second support, just put your stop loss. Okay, you just consider, okay, if you want to buy this level to buy, but if you, oh, where is the, do I delete it? What did I do? Okay. Okay, this is the buy entries you consider, okay. But if you don't not confident, just trade, maybe just try the strategy, buy from here, put 0.01 at least, right? And try to trade on the real account, not the demo, because if you trade a demo, there is no emotion. Okay, at least you trade a real money, you can use like the iCent, or you can use like a dollar account, and then just put like 0.01. At least the real money, you will have the emotion involved. Because if you trade demo, you put 100 lot, you put like 1,000 lot, you earn 1 million, 2 million. In a demo, you don't feel anything because there is no emotion involved. But if you trade with your own money, real money, and then there will be emotion, you will feel, they will feel like how the trading, um real trading work. So this is a buy entry for gold. Okay, still falling at least here, at least 2004. They're gonna be my first entry, and the next instead they're gonna be 23.95. So between this one, I'm gonna kind of layer, meaning that I will have like small lot size here. Okay, I don't put like 10 lot or like 5 lot at like 24,000 here. I will just have like smaller lot here for gold. Okay, do you have any questions so far? I'll pause here for a while. Let me know if you have any question. Okay, that's all for the GMMA. Let we just packed it together. Okay, for this USD, it is a picture that I took from here. Okay, here. Enter here, so you can enter here, enter here. I think I enter H1, which is here. Okay, you should enter from here or here, and then you can say close, and then you continue to buy, and then we exit when close over, which is the green close below. So shall we should we buy or sell the EURUSD based on H4 time frame? Okay, the target for EURUSD, which I'm looking at for the first support, are gonna be somewhere around this level. Okay, that will be let me just remove the what I wrote just now. You can use Fibonacci, okay, and then we can use the extension. Today is a Friday already, so you already won some money today. I usually don't trade during the New York section. Okay, because my time zone, I'm based in Singapore. When a New York section is about 8:30 p.m. Okay, so by 8:30 p.m. usually I don't trade if I already hit my target for the day. Okay, so for the first support, I will identify here. So meaning I target at least over 4 to this level. Okay, or this is my like you know my kind of like intermediate resistance, meaning that if price break here, gonna pull back, am I gonna short from that level? And again, you can use correlation to trade as well. So USD is a negative correlation with DXY. This is either I identify my first support or sorry, let me see. I pick this gonna be my first support. This is my intermediate support. Let me see how many pip from this one to this one. 15 pip for scalping. I'll just put no man, just put at second support here. Extension, just remove it. Meaning that if price break here, okay, the target which is at the first support here, and then the second support gonna be there. Let's just reuse the. Okay, we have 38.2% fib level on second support. Now, let's say if you identify your first support here, if we want to buy now, can we buy now based on what we can see? It seems like we can buy. Okay, we can buy EURUSD now. But again, if you buy and then you need to know where you're going to put the stop loss, okay? Because this is really strong. The reason I want to buy here, see, I haven't clicked, I want to see first, okay? Like this one, I might identify my kind of like support. It seems like break below here, and then I identify, okay, this another kind of like support level, but it seems like there is a wick and the body somewhere around here, meaning that I'm gonna buy now, and the price, my stop loss, I'm gonna put just slightly below this wick, because I'm not gonna put the first support here, because it hit my stop loss, my neck plan. I will see if price come to my first support here, which I identify here, and then I see the confirmation. I'm gonna have another buy entry right there. But if you have really big account, and then you either you buy now, you can put your stop loss below your first support, up to you. Because you know our lot size and account size is different, so you need to manage your lot size as well. It seems like this is my buy zone. But let me see, this my M15, the rejection. What about M5? Okay, I'm gonna buy. I'm not gonna ask you to buy. This is your own risk. Okay, if you want to buy, it's up to you. I'm gonna buy EU. Okay, I just click buy EU, so you may consider. Just these are my buy zone. So when come to the zone, I just buy. Okay, if you want to follow, you want to try, you just put 0.01. That's all. Okay, because sometimes if you know how to identify the level, key level, and then price come to the zone, and sometimes you dare not to like enter or like have the order here. Okay, but I already put one. I will see that better. The bar for me, I already put my set my stop loss as well, just slightly below this week. Okay, let's just see. Okay. Maybe look at dollar. Dollar still can. Okay, for key level for the dollar. Okay, they are very strong. Um, this this one could be the first resistance here. If they can break above this one, the next target that would be this first resistance. I think the second resistance are gonna be somewhere here, which we just use. Now in this case, right, you can see that now this strong downtrend and they are acting at the resistance level. Let's just say whether price can fall from this level, meaning that if dollar is falling, EU, GU gold will be rising. Okay, now it's approaching the resistance level, then EU somehow is at my support level. Okay, I will see whether they can bounce from this level. It's a H4. And GU still follow for GU, GBUSD, I'm not gonna buy now because that is not the level that I'm looking for. For the GBP, I will wait somewhere how is this level. If the price come, and then I might consider to buy. Okay. Because looking for sell GBUSD. Okay. This is how it look like in M5. I think I should be positive already. Let's just see, okay, whether it go here. For scalping, you just maybe aim for 10, 15 pip, 20 pip for USD, and you may close the entry. And it's very nice. Okay, if you enter together with me, we already positive for the EURUSD. Okay, I'm already positive. So okay, the first when I enter, I just put my SL stop loss, but I did not put my TP because TP I always put the last one, always put stop loss first. Okay, just go to another pair. For the utilization, we already buy, like this is our buy zone, right? Price already rising and already hit the TP, which is the TP or take profit is at this level. It already TP and then falling. Meaning you ask me whether we're gonna shop from this level. No, because that is my, even though I identify my TP there, but the level that I'm looking for for sale, okay, that would be around this level. Because there is a way imbalance over here. There is a fair value gap somewhere around here. There will be slightly go below this. Either you sell at the 61.8% fib level, meaning that you're gonna short from this level. We should see the confirmation somewhere around this level. It's gonna be my second resistance here. let's say you're gonna short here. I'm not gonna hold until here, okay? My TP, this is to be my first support for my TP1 or my first support here. And my second support I'll put at the multi-swing low here. Okay, I think price still can pull back more. Pull back more is over oversold. It seems like the MACD is already closed, and then you can see the green one. So at least target somewhere here. Okay, we will see for the USD chef. It's not the level for to um to sell yet. Okay, USD chef break everything. Okay, what you can see, let's say we short here for the GMMA based on indicator, we short because the green cross below, right? You can see that this very strong downtrend because there's a big gap here, right? And now price come to this one, we should exit the sale position and then we should buy. That should have divergence as well. There's no divergence, but over here, oversold, right? Here, oversold. Close above, close above, the green one go above already. The histogram here, that's why we buy. And then the candle also close with the bear bullish engulfing candle as well. Should exit the sale and then you buy for the USD session. Again, USD JPY we buy, but we buy which you should close at the resistance level. Okay, because for all momentum it is still on downtrend for USD JPY. Okay, the level here, this is my resistance level. We short here, I think I get 20 pip. I already closed. Okay, so you ask, if you were to ask me, I'm gonna sell again or no, because even though it's still falling all the way there or below, but it's okay because we can earn every day. Okay, you just set your target. You want to earn like how much you want per day, or this pair you set for 15 pip or 20 pip and then it TP and then you just close your computer and we can do other own thing, do other thing. Okay, because trading is just a part of your life, right? It's not everything, so we also have other thing to do. um but some people they have a mindset like if they earn 1,000 and then they think that okay, I think we should earn more, maybe like should today I want to 2,000 or you want like 3,000, but actually your target is like 1,000 per day. And then what if like today is not your day, instead of you already earn 1k and then you giddy you want another 1k but you lose. Okay, you lose your profit and then you also lose your capital. So just set the target, or you can have like multiple account, meaning that like at least 2 to 3 account. And maybe I will share with you guys, you should have like 2 to 3 account, one for swing, one for scalping, and one for new trading. Okay, let's say this account already hit the target, then if you still want to trade, you should trade another account. Okay, this is my first resistance here and my support right here. Second support. You can see that it's acting at the resistance level. Okay, that would be 61.8%. So this is the level, but I'm not gonna short here because let me just see. Because I already happy with today. These are the key level. Okay, you may consider you want to short. Because I already have, just now I opened a buy position here for the EURUSD with you guys just now. I still hold, and then it's green. Okay. If you're happy with the scalping, you may just close. Okay, but I still hold a little bit more, and then I might close as well because after this I got going home, so already happy with the profit. Or you're gonna buy here, but of course this is gonna be my resistance level, meaning that if you're gonna hold is your TP at your first resistance, meaning that for me I'm gonna short. Okay, if price go there, go all the way here, like go all the way here, I'm gonna short. Okay. All right, guys. Do you have any questions so far? Where is the Okay, I'm going to launch the poll. Can you guys help me vote? Okay, to improve our webinars. Okay, and I will see you guys again. Me and my team will see you guys again. I think next week because we will see you guys every Wednesday and Thursday. Okay, just in the poll. Okay, guys. So that's all for today, guys. Thank you so much for your time. See you guys again in the next webinars. Just take care and have a good weekend. All right. Bye, guys.